It all started so simply. For decades, American farmers had a reliable customer, a massive, hungry customer named China. They planted soybeans, harvested them, and shipped them across the Pacific. It was a beautiful, profitable cycle. Farmers in Iowa, Illinois, and Nebraska planned their lives around it. They bought new tractors, sent their kids to college, and kept their small towns alive, all on the back of this one humble bean. The system worked until it didn't. One day, the phone just stopped ringing. The biggest buyer in the world simply hung up, and for thousands of American farmers, the dream turned into a nightmare. Imagine you run a lemonade stand, and one customer buys 90% of your lemonade every day. You build your whole life around him. Then suddenly he switches to the kid down the street. All of it, gone. That's exactly what happened to American soybean farmers. This wasn't a gradual slowdown. It was a full stop. The ships that once lined up at US ports to load soybeans for China were suddenly gone, leaving behind a mountain of unsold beans. This was an existential crisis. Farmers were left holding millions of tons of soybeans with nowhere to send them. Prices plummeted. The beans, once a symbol of prosperity, became a financial anchor. The US was exporting over 30 million metric tons of soybeans to China annually. You don't just find a new buyer for that overnight. The shockwaves hit the heartland with brutal force. These aren't faceless corporations, they are family farms, passed down through generations. Suddenly, these families were facing foreclosure. The local equipment dealer couldn't sell tractors. The small-town diner had fewer customers. The entire economic ecosystem of rural America, built on agricultural trade with China, began to crumble. The unexpected halt in soybean imports wasn't just a trade statistic, it was a personal catastrophe for thousands of American farms. The fragility of global supply chains became painfully clear. The American dream, once rooted in those green fields, was now in jeopardy. For many, the future became a question mark. The silence in the heartland was deafening. The ripple effects spread far beyond the farm. What was once predictable and secure had vanished overnight, and the world was about to learn just how much could change when one customer walks away. Why did China do it? This wasn't a random act. It was a calculated move in a much larger game. At the heart of China's strategy, food security. For a nation of 1.4 billion, relying on a geopolitical rival for food is a massive vulnerability. China's leaders saw how trade disputes could instantly disrupt supply chains. Their decision to stop buying American soybeans was a declaration of independence. China was signaling it would no longer be dependent on the West for essentials. They decided to build their own system, with their own partners, on their own terms. This move was years in the making. China invested billions in infrastructure in countries like Brazil, new ports, railways, and storage facilities, all to create a non-American soybean pipeline. They were building a parallel universe for trade, one where the US was not the central star. By diversifying its food sources, China gained leverage. It could reward friendly nations and punish adversaries by shifting its business. This gave China immense geopolitical power without firing a shot. The halt in US soybean imports was a clear demonstration of this new power. China is no longer just a participant in the global system. It's building a new one, with Beijing at the center. The soybean was just the first domino to fall. The economic consequences for the United States were immediate and severe. Farmers' incomes, already squeezed, fell off a cliff. Government subsidies helped, but they were a band-aid on a gaping wound. The pain radiated outward, crippling entire rural economies. Businesses that depended on agriculture, seed sellers, equipment dealers, truckers, felt the chill. When farmers stopped making money, they stopped spending money. The domino effect hollowed out communities. Ports and logistics hubs, built for massive soybean shipments to Asia, saw traffic plummet. Billions in infrastructure sat underused, a monument to a bygone era. The crisis exposed a fundamental weakness: over-reliance on a single massive market. The US scrambled to find new buyers, but no one could match China's appetite. The fallout was a harsh lesson in the risks of putting all your beans in one basket. The American supply chain, once a model of efficiency, was now a cautionary tale. The shock was not just economic, but psychological. The rules of the game had changed, and the US was left behind. As the US agricultural sector reeled, Brazil was ready and waiting. For years, Brazil had ramped up soybean production, transforming vast land into high-tech farms. Much of this was financed by China, who needed a new, reliable supplier. It was a match made in geopolitical heaven. Massive cargo ships now carry Brazilian soybeans to China, bypassing the US entirely. China helped fund new railways and deep-water ports in Brazil, creating a new soybean highway. Brazil has overtaken the US as the world's top soybean exporter. Brazilian farmers are thriving, expanding operations and investing in new technology. The Brazilian economy has found a powerful new engine of growth. For Brazil, China's decision was the opportunity of a lifetime. This new Brazil-China axis shows that prosperity is possible outside the Western-led system. The new trade routes are the arteries of a shifting economic world order. The flow of goods and capital is now directed by Beijing and its partners. The US is no longer at the center of the map. The soybean saga is just one chapter in the rise of the BRICS alliance: Brazil, Russia, India, China, and South Africa. For years the West dismissed BRICS as a talking shop. Not anymore. BRICS nations are building a parallel economic system, independent of the US dollar and Western institutions. The goal: geopolitical independence. They're tired of US economic power being used as a political weapon, so they're creating alternatives, like the new development bank and trading in local currencies. The China-Brazil soybean trade is a perfect example, financed and settled outside the Western system. This model is spreading across sectors and partners within BRICS. They're creating a closed-loop economy, resilient to Western pressure. This is a fundamental challenge to the post-Cold War order. The unipolar world is over. We're entering a multipolar era. BRICS isn't just asking for a seat at the table, they're building their own. The soybean trade is just the appetizer. This isn't the end of globalization, but its transformation. The old model, one integrated global market under Western norms, is fading. In its place, a fractured, divided global economy. Two major blocks are forming, each with its own supply chains and standards. The West, led by the US, on one side. The BRICS-centric bloc, led by China, on the other. This is the great decoupling. Countries are being forced to choose sides. The soybean crisis is a clear example. US and Brazil now serve different economic spheres. This rewiring of the global economy carries risks, inefficiency, higher prices, and greater volatility. Severed economic ties mean less communication and more suspicion. The interconnectedness that once kept conflict in check is weakening. We're entering an era of blockalization, where trade and technology are contained within spheres of influence. The soybean crisis was a wake-up call. The old assumptions no longer apply. What can the United States do? The options are limited. The soybean market with China is gone, and it's not coming back. New markets like Mexico and the EU help, but can't replace China's scale. The government props up farmers with subsidies, but it's not sustainable. Billions are spent to compensate for a lost market. This is the price of losing a trade war. Paying your own producers not to produce. US agricultural exports were once a source of strength and leverage. That leverage is now diminished. China has insulated itself from American pressure and shown the world that US dominance isn't absolute. The loss is more than economic. It's a blow to American prestige. The path forward will require painful adjustment and diversification. The golden era of American soybean exports to China is over. The challenge now: build something new and resilient from the ashes. The soybean crisis is just the beginning. The same decoupling is playing out in even more critical sectors, like technology. The fight over 5G, AI, and semiconductors is already underway. China is pouring billions into building its own tech sector, ending reliance on the West. Two tech ecosystems are emerging, one in Silicon Valley, one in Shenzhen and Beijing. This tech curtain will force countries and companies to choose sides. The stakes are enormous. The nation that leads in technology will have decisive power. The soybean trade war was just a warm-up for this higher-stakes competition. The final frontier is global finance. BRICS nations are challenging the dollar's dominance, promoting their own currencies and systems. If the world moves away from the dollar, the global balance of power will shift. The story of the American soybean farmer is a cautionary tale of how quickly things can change. The question now: what and who will be next?